This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, June 7th, 2023, and that means that it is the first week of Atlantic hurricane season, but it also means that it is DCA Wednesday. Are you ready to stack those sats? Before we get into that and a lot more, a real quick look at the vital statistics. At the time of this recording, we are sitting at a block height of 793,327, and Bitcoin's on sale a little bit, ringing in at a US dollar value of $26,415 or 3,786 sats per dollar. And while that seems like, a lot of people are saying Bitcoin crashed because of the debt limit deal and the treasury bills sucking the liquidity out of the market, or because of the SEC enforcement action, things that we're going to get into here in a minute. But I remind you, if you zoom out, looking to just 2 episodes ago, Bitcoin was $26,375. So if you're staring at price charts and thinking that Bitcoin has crashed, it's actually $40 a Bitcoin more than it was when we began episode 107 just 2 weeks ago. So once again, as they say, zoom out. It helps keep life in perspective. It helps keep Bitcoin into perspective. I'm a glutton for punishment. I like to stare at those price charts, but really, if you zoom out, it really gets rid of a lot of the drama. Speaking of blocks, we are currently 46,673 blocks till the next mining reward halving. TikTok next block. As I've said repeatedly, the halving is kind of a big deal, more so than just because it's how we eventually get to, the limit, the hard cap of 21 million Bitcoin being issued. But, because it's somewhat of a New Year's Eve or Chinese New Year style celebration in the Bitcoin community. And already big parties are starting to be announced all over the world. And there will probably be one in your area. If you haven't heard of one already, stay tuned, because we are less than a year away from that happening. According to the estimator at Clark Moody's dashboard, it looks like that slipped today again. It's currently forecast to happen on April 21st, 2024. That had been moving up steadily from the end of April to as recently as last week. It was estimated to be on 420, and now it's slipped today. Again, we won't know exactly when it's going to happen until it's a lot closer to happening. Maybe not even until the day it happens. But you get the idea. It's less than 1 year away. And not only does that traditionally symbolize the beginning of the next euphoric phase, the next hyper bull run, the next parabolic bull run, it's also just a really good time. Back to those vital statistics. Bitcoin's market capitalization is ringing in at $512.3 billion. Obviously down about $14 billion from last week, but $1.1 billion higher than it was 2 weeks ago. So again, if you zoom out, things haven't really changed a whole lot. And we're going to get into this in a little bit as well, but I keep saying that if you believe in Adam Meister's 210,000 block theory, or if you believe in the 4-year halving cycle theory, that the halving cycle is what causes the bull runs and then the subsequent over exuberance, which leads to a retracement, then the bear market. We're reliving 2019, and 2019 was basically a year of, it didn't go completely flat sideways, because there was that really big peak where Bitcoin ran up quite a bit in value, and then it went back down a bit. But in general, it was neither a bear market nor a bull market. It was what they call the accumulation phase. And if history doesn't repeat but rhymes, we're repeating 2019, and that's a good thing if you want more time to stack. You should be stacking as much as you can before you miss out, because you just really never know. But for those of you who are stacking as furiously as they can, or as you can, if we do go sideways for the remainder of what was, the remainder of 2023 until just after the halving, a little under a year from now, then hopefully you'll just stack more sats, and that's a win-win. I mean, that's a good thing, right? If you value your wealth in shiny yellow rocks, however, it will currently cost you 13.7 ounces of gold to buy just one Bitcoin. That is a heck of a lot of the My Precious Peter Schiff coins. Basically just about where it was last week, despite the fact that Bitcoin has dipped in value a tiny bit when compared to the US dollar since we last spoke. But again, zoom out. If you look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 episodes, so the last 3 months worth of episodes, in general, zooming out, the price of Bitcoin has remained relatively constant, which, is actually kind of scary when it comes to Bitcoin, right? But it happens every accumulation phase of the 4-year cycle. So really nothing to see here. Again, I'm going to stick with the vital statistics, but we're going to talk about price a little bit more later on. And there's a lot of theories of why the market is down, why Bitcoin is down. But if you just look at it compared to the previous cycle, it's doing exactly what it should have done, regardless of what, reasons Bitcoin has, according to the talking heads, the influences for either pumping or dumping. Nothing is surprising if you just look out and compare it to the previous cycles. For those of you who value your wealth in pizza, one Bitcoin will purchase you 1,477 large pepperoni pizzas from Papa John's. A heck of a lot of pizzas, more than 4 years worth of pizza. If you were to order one large pepperoni pizza a day for for a little over 4 years, and that is a heck of a lot of pizza. Certainly a lot more than, Laszlo got for his 10,000 Bitcoin on that Bitcoin day all those years ago, the first Bitcoin pizza day all those years ago. The mempool was looking absolutely clogged just a couple of days ago. I didn't actually see it happen, but one of the podcasts I was listening to, they said they saw it was over 100,000 transactions pending. It was something like 225,000 transactions pending in the mempool. I never saw it get that crowded, and it's looking a little less crowded than it was even last week. The last 2 Bitcoin Bulletin podcasts in a row, there were approximately 92 blocks worth of transactions pending in the mempool. And that is down rather significantly to just 69 blocks worth of transactions at the moment. Still a heck of a lot of pending transactions. And probably most of those are ordinals, inscriptions, stamps, etc. Those Bitcoin S-Coin projects that were enabled by the Taproot activation. But again, because those are really tiny transactions and they're not paying a whole lot in fees, they really haven't had any effect on-chain activity, with the minor exception that it is a little bit more expensive to move Bitcoin around on-chain, but still not that bad. The fee estimator on Clark Moody's dashboard says that if you want to guarantee an on-chain transaction is included in the very next block, he's recommending a fee of 8 sats per VByte to do so, saying that a fee of 16 sats per VByte will still clear within a day, and it'll take approximately the same fee of 16 sats per VByte to guarantee a transaction is cleared in a week. However, mempool.space is giving a slightly different picture. They're saying it's only going to cost 27 sats per VByte, basically for a high priority transaction, which works out to about $1. So depending where you get your information, I saw one fee estimator was saying it was going to cost about $5 for the average on-chain transaction, which is nothing compared to, when the mempool was completely jammed in 2017, right when we were hitting the December 2017 high. We were looking at $50 fees. 35 to 50 was not uncommon. And that was with Bitcoin being worth a whole lot less. So you were, you were spending even more in terms of Satoshis to get those fees mined on chain. $1 to be able to move unconfiscatable wealth anywhere in the world freely and in any amount is still a bargain, even though it is more expensive than it was before the whole ordinals thing. All right, that metric that I like to follow, my favorite metric, Bitcoin's 24-hour on-chain transaction average, is starting to come down too. It's last week we dipped into the 5 transactions per second range, and as I mentioned, before the whole ordinals and inscriptions thing, really Bitcoin was able to handle a maximum of about 4 transactions per second. And we saw, over 7, almost 8 transactions per second when it was all those ordinals transactions being mined. Today, that's down from 5 to just 4.76 transactions per second. And that is a lot closer to what we would previously consider normal. Prior to the Taproot activation, anytime we saw above 3.15 transactions per second, that was indicating a heck of a lot of on-chain activity, which up until that point was indicating, a healthy amount of activity, a healthy amount of adoption, and usually that corresponded to an increase in the value, the US dollar price of Bitcoin. Obviously, if that were to have held true when we were looking at 7.73 transactions per second, that should have meant we were at all-time high territory, but that was not the case because that's really an artificial pump in the on-chain transactions because of the whole ordinals and inscriptions thing, which I still think is pretty much a fad. Maybe that will evolve into something useful and lasting in the future, but I don't think it will continue to exist, at least in the way that it currently exists, especially not those BRC20 scam tokens. One of the nice things about the value of Bitcoin going down, about it not even necessarily going down, but going sideways for a while, is normally that's when all the scam projects get shaken out. That's when the hype dies down, the buzz is quieter. There's not much activity. That's when the altcoins tend to shake out, and things get back to normal, and Bitcoin developers can get back to just building. So hopefully, if we continue to go sideways for another 6 months, a year or so, that'll help shake that out. And if ordinals and inscriptions do evolve into something that we find useful, then hey, win-win, right? Right before last week's Bitcoin Bulletin broadcast, there had been a mining difficulty adjustment. It was a relatively large one at 3.4% increase in the difficulty it took for a miner to find a block. And as you know, Bitcoin adjusts its mining difficulty every 2016 blocks, which is theoretically every 2 weeks. But again, it's based on blocks, not human time scale. And so if blocks are coming in faster, it's faster than 2 weeks. If it's coming in slower, it can take longer than 2 weeks. Currently, we find ourselves 977 blocks away from the next difficulty mining adjustment. That's still looking like that's going to be on June 14th, so next DCA Wednesday. And if you remember last weekend, it was crazy. I mean, we were only a few blocks into the new epoch, so the averages and the estimates were nowhere near reliable because we just didn't have enough data points yet. But if you recall, some estimators were saying that it was going to be that we were going to have a mining difficulty decrease as much of minus 23.4%. Now that we're a lot closer, we're more than halfway there. Things are looking a little more rational, but it's still looking like it's going to be a decrease of anywhere to 1.0 to 1.6%, depending on where you're getting that data. And that is because during this halving epoch, blocks have been averaging 10 minutes and 9 seconds between blocks. Obviously, that's a little longer than the 10-minute goal, the 10 minutes that the Bitcoin protocol is aiming for. So, that hence the decrease in mining, the upcoming decrease in mining difficulty, if that continues. Obviously, that is subject to change. 977 blocks is still a long way away. That's still a week. If more hash power comes on the network, that could end up being an increase instead of a decrease. If hash power stays the same or decreases, it could be a decrease in difficulty of even more than 1.6%. As you remember last week, blocks were averaging 13 minutes and 5 seconds. So that's a big difference between this week and the more time and data we have, the closer we get to that halving, the more it would be, the more reliable that those estimations are going to be. Real quick, thank you to those of you listening on your favorite podcasting 2.0 apps such as Fountain and Breeze. Just a reminder that you can earn sats for listening to your favorite podcast on the Fountain app. They are not a sponsor. I do use Fountain though because, I use Fountain because this podcast, it's a way that you can help support the podcast or reach out and say hi to us. But you can also earn sats for listening to your favorite podcasts as well. And this week we do have one boost. Again, it is from Leggy. Thank you, Leggy. Leggy's a longtime supporter of the podcast. And Leggy sent 5,700 Satoshis and says, thanks. I'm boosting from the 21 MMT, parentheses, Meetup Meisterschafts Turnier. I hope I pronounced that right. Where we meet with teams from meetups all over Germany and Swiss to have fun and the cup and win the cup in an Olympic of Bitcoin games! ! Bitcoin Prague is kicking off tomorrow, and that's one of my dream conferences. I'd really, really like to attend that one day. There's numerous reasons I'd like to go see Prague. There's just a lot of history there, but not just Prague. One thing I've noticed just observing on Twitter and listening to podcasts and meeting other plebs, European Bitcoiners have a lot of fun, especially German Bitcoiners. I see quite a bit of posts from the 21 peeps, etc. On Twitter. It just seems like German Bitcoiners, man, they might not be meeting up 30,000 at a time like in Bitcoin Miami. I mean, Bitcoin Miami is certainly a good time, and Pacific Bitcoin in California looks like a heck of a good time. But these smaller meetups that Europeans are having just look like they're in a class by themselves. One of these days, I'm going to get to join you guys at one of them. I would like to go to Prague for BTC Prague. Maybe BTC in Amsterdam would be a lot of fun. Amsterdam's a neat town. I have not been there for a very long time, but I'd very much like to go back. But these small little Bavarian meetups all over southern Germany just look like a lot of fun. And the Bavarian Bitcoin hodler from one of the last meetups in Germany that I'm sorry, Lena, I didn't mean to butcher your name like that. But the creator of the Little Hodler cartoon and the Little Hodler plushies has the Little Hodler. I think he's in lederhosen, and he's wearing the traditional Bavarian cap and holding just a gigantic Bitcoin-shaped pretzel. And that was an extreme limited edition Little Hodler. But just that sort of thing is just indicative of just how much fun Europeans have with their meetups. And hopefully I'll be able to join you guys one time because, man, I'm jealous. It just looks like so much fun. And so for those of you that are heading to Prague or in Prague already, I know that's not Germany, Czechoslovakia or whatever. If you're there, I'm raising up an imaginary Czech pills to you. So, Sofa, Saludo, whatever language you speak in the country you come from, you guys have a great time, and I wish I could be there with you. Speaking of different countries all around the world, the geographic distribution of listeners is almost exactly the same as it was last week. There is a very, very minor change. None of the countries changed in their ranking, but the United States moved up. They gained just a little bit for at least the last 6 months to a year. The listeners in the United States had made up 51% of my audience. As of today, the United States is making up 52% of my audience. So just a tiny bit more people listening in the United States than previously, but nothing else has changed. So thank you, everyone in the United States. Number 2 remains Argentina, where 13% of you are still listening from. That's exactly the same as last week. So muchos gracias, amigos, in Argentina. Germany remains number 3. They're still at 7%. So Dankeschön to my friends in Deutschland. Thank you very much for listening, all my German Bitcoin plebs. Luxembourg is right behind at number 4, still 4%. So Danke in Luxembourg, or Morien in Luxembourg, if you speak Luxembourgish. Thank you again, Leggy, for teaching me how to say that. So you guys are much, much appreciated. Colombia remains number 5, still 3% of you are listening from Colombia. So again, muchos gracias, amigos in Colombia. Canada remains number 6 with 2% of you listening from Canada. So thank you to those of you in the Great White North, or as Greg Foss likes to say, those of you living rent-free in the attic of America. Number 7 is still Spain. 2% of you listening from Spain. So muchos gracias, amigos in España. Number 8 remains Venezuela. 2% of you are still listening from Venezuela. Muchos gracias, amigos in Venezuela. It seems like a lot of my listeners are in Spanish-speaking countries, so that's really cool. Australia is still in the count. As you remember, I think it was last week was the first week that Australia had moved up into the top 10 after, they peaked up into the top 10 a month or so ago and then dropped off. Australia is back. They still remain at number 9 with 2% listening from Australia. So good day, mates, in Australia. And Sweden, you guys remain number 10 with 1% of our listeners listening in Sweden. And I normally only announce the top 10, but the number 11 has stayed the same as well. And 11 is France, where 1% of you are listening from. So thank you for all of my listeners, for all of you listening out there, all of you plebs stacking alongside us, regardless of where you may be. Hopefully a lot of you are in Prague for the BTC Prague conference kicking off tomorrow. And I will be trying to follow along as best I can, watching any live streams I can find, etc. But what a good time. Hopefully I get to join you next year. All right, so on to that price news. Again, as I mentioned, if you just zoom out, BTC price, the Bitcoin price, Bitcoin US dollar price is pretty much exactly where it's been for months. Again, Adam Meister has his 210,000 block theory. That, basically that's the 4-year or the halving cycle theory, which says that, every Bitcoin halving, the Bitcoin price goes because of the supply shock, the decrease in the amount of new Bitcoin being mined, being dumped by commercial miners on the market, gets cut in half. And supply and demand says that if you reduce the supply, but the demand stays the same, the price would go up. Obviously, you get it to the point where it's going up so fast that it almost becomes a self-fulfilling prophecy. It's the FOMO kicks in. It's called the euphoric phase. And so maybe the price goes up a little too high. And then, you get that market correction and Bitcoin has its 80% retracement or whatever. But looking at the Bitcoin price history chart, if you remember, after the 2027 halving, Bitcoin tanked all the way down to like 10,000, and then it dumped all the way to 3,000. Then it rallied all the way up into the teens again. Not as high as that 17,000 previous all-time high, but then it slowly tapered off. So every 4 years on the Bitcoin chart, you get a big spike, almost like a stair step, where Bitcoin goes up and then comes down a bit, but not as much. Then goes up a little more, then comes down a bit, but not quite to the previous all-time high. And slowly and surely, stair steps up and to the right. But between the last two cycles, there's a little smaller hump, a little smaller bump. And that is pretty much where we are right now. And if you look at the yearly chart, you'll see Bitcoin came down from its all-time high. It hit that low in June when it, was on June of last year when it was a year ago when it was available basically for $16,000 for a while. Then it spiked back up in price to around 32 or to 34,000. And then it's trended down into, the upper 20s now. And you could basically shrink that, that last halving cycle chart down a little bit and put it exactly over the previous halving cycle, and it would match almost exactly except the crazy double top we had. But in general, if you looked at the halving, it shot up. Of course, we had the China mining ban FUD and the Elon FUD that led to a depression, maybe knocked the top off of the blow off top. So we ended up with a double top. But if you ignore the double top, the chart overlays pretty darn nicely to just 4 years ago. So if history repeats or rhymes, you should see Bitcoin actually continue to trend down for a while and then maybe go up a little bit. Then we had the COVID crash, which was right before the halving. That was a black swan kind of event. Maybe something like that happens, maybe it doesn't. And then steadily up and to the right, and about 6 to 18 months after the halving, we're looking at new all-time highs. And of course, if that happens again, we should be looking at a new all-time high no sooner than October or November of 2024. And that's good news, because while it would be really cool to see Bitcoin go to the moon right now, I don't have enough sats. And I'm assuming you don't have enough sats either. So for those of you fretting about the price, you should be thanking your lucky stars that we're going to stack a lot more Satoshis today than we could if Bitcoin were significantly more valuable in US dollar terms. So people are out there blaming this latest price decrease on a lot of things. They're blaming it on the U.S. debt limit debacle. They're blaming it on the SEC action, etc. But you don't have to have an excuse for Bitcoin's price action. If you just look at history, it's doing exactly what it should be doing if history were to repeat or rhyme. So speaking of that news, the U.S. debt limit debacle was looking at potentially making the United States default on some of its obligations. And just an hour or so before last week's Bitcoin Bulletin podcast, the United States Senate passed the debt limit deal. And what that basically did is it didn't increase the United States' debt limit. It abolished it for 2 years. Basically, there is no debt ceiling. The government can issue as much debt as they want for the next 2 years. And as a result, we're seeing headlines like, quote, U.S. national debt spikes by $359 billion on the first day after the debt ceiling suspended. And then there's an article from Reuters saying investors are bracing for a wave of U.S. government bond issuance as Treasury plans to refill its depleted coffers quickly after the recent suspension of the debt limit. It goes blah, blah, blah about how the Treasury had depleted its general account. And then it says Deutsche Bank strategist says, blah, 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 that they expect a net bill issuance of $400 billion in June. Now, I'm going to break away from the quote for a minute. $400 billion doesn't seem so odd considering they've already issued $359 billion. So we're lucky if it's only going to be $400 billion. But back to the story. A net issuance of $400 billion in June, followed by $500 billion between July and September. And in total, Zhang estimated $1.3 trillion in net bill issuance by the end of the year. The expected T-bill sales could drain liquidity in financial networks, investors and analysts have said. And that's just kind of a no-brainer. Maybe it won't affect the Bitcoin market, but in general, investors have kind of a fixed sum of money that they invest at any given time, right? So if all of a sudden there's $1.3 trillion worth of assets available to invest in that didn't exist just a day ago, well, supply and demand would say that if there's a lot more things to invest in, that the prices of those things go down, right? The more options you have, the more they go down. Let's say there was only one type of apple in your grocery store, not the computer, the fruit. And you went to the grocery store and apples were super rare. And they could pretty much charge whatever they want for an apple. If you wanted a red delicious apple, they might say apples are $20 a pound. But then all of a sudden, the floodgates open up, all kinds of new orchards come online, and not only can you get more red delicious apples, you can get 1 trillion pounds of multiple varieties of apples available. And the entire produce section of your grocery store is now full of apples. Do you really think they're going to be able to get $10 a pound for those apples the same day? No, probably not, right? So it's the same concept. When you have the same amount of money chasing after a certain amount of goods, and that certain amount of goods doubles, supply and demand says that, prices come down. That's kind of the exact opposite of what's happening with Bitcoin, whereas Bitcoin becomes more scarce, it gets more expensive. But in the case of treasury bills, when they flood the market, that will, as they say, suck the liquidity or drain the liquidity from financial markets. So a lot of people are blaming that for why the stock market has gone down, even though the stock market was going down because everyone was afraid the U.S. was going to have a default. Then they agreed to raise the debt limits, and the market went down anyway, continued to go down anyway. And they're saying, oh, well, that's because they're flooding the market. That may be when it comes to treasury bills, et cetera. But when it comes to Bitcoin, the price is doing exactly what it should be doing. The other huge news this week is that the United States government is basically gone to war with two of the largest Bitcoin exchanges in the world. On Monday, the United States Securities and Exchange Commission announced or filed lawsuits against Binance and Binance's founder and CEO, or founder and not CEO of Binance US, but their figurehead, CZ. And basically, they sued them because, for multiple reasons, they said their Binance coin was an unregistered security, that they were selling unregistered securities, etc. But today, the SEC followed up with a 1-2 punch by suing, not today, yesterday, the SEC followed up with a 1-2 punch by suing Coinbase. And the Coinbase story is a little more telling because not only are they suing Coinbase for selling unregistered securities, they're calling them an unregistered securities broker. They also said that their offering of staking as a service for people that are staking their staking their Ethereum and other S coins on Coinbase, that in and of itself is a security, and it's an unregistered security. So, the main takeaway from this is get your freaking Bitcoin off of exchanges, right? None of this should really affect you. None of it should affect the average hodler, regardless of where you are in the world, unless you're keeping your Bitcoin on one of these exchanges. Because let's say the SEC prevails, or the SEC, succeeds in bankrupting Coinbase one way or another. If Coinbase folds, even if it has nothing to do with Bitcoin, if they close up shop and your Bitcoin is in their custody, guess what? It's not your Bitcoin, and if you're lucky, you may get some of it back later in a bankruptcy proceeding, but not if the SEC comes in and seizes all their assets to cover some huge fine they assess. Long and the short of it, we all know that basically most altcoins are securities. In the United States, what is a security is determined by the precedents that was set in a Supreme Court case, and it's become known as the Howey test. Basically, it says that anything is a security if it meets 4 criteria, and the first is that it's an investment of money, and that it's in a common enterprise, and that it's with the expectation of profits and derived from the work of others. So a heck of a lot of things can fit into that category. Although we know SEC Chairman Gary Gensler has already said that Bitcoin is not a security, that it's a commodity, but pretty much everything that isn't Bitcoin is a security. So even this is just the beginning. I would expect that they're just not going to go after Coinbase and Binance. That this is going to have some knock-on effects. And if they come after the exchange you're using, please don't have your Bitcoin on those exchanges when that happens. All right. I'm actually happy today because anything that makes the price of Bitcoin go down in US dollar terms means we're going to get more sats for our $20 stack. So let's get right to it. The reason we're here is because today is DCA Wednesday, and that is when we grow our stack. If you don't know what DCA is, if you haven't been following us or you've been living under a rock, of course, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this will be our 98th stack. We started stacking all the way back on Wednesday, July 28th, 2021. So our regular interval, we chose Wednesdays. This is one of those things where you do you, regardless of what you're investing in, regardless of where you're putting your money, your sticky fiat. Most people tend to do their investing when they get paid, right? So if you get paid weekly, it's not unusual for people to do their DCA stack, every Friday or whatever their payday is. If they get paid every 2 weeks, that's okay too. What's important is that you are consistent and regular. So we chose every Wednesday, and we chose our equal portion to be just $20. And the reason we chose $20 is because I wanted to show that even if you aren't wealthy, even if you don't have that much money, as long as you can scrape together $20 a week, that you could build an appreciable stack of Satoshis. And over time, I think we've already proven that. Again, this is a you do you thing. You do your own research. If $20 is nothing to you, and you're the sort of person that drops $10,000 or $100,000 or $1 million at a time on your investments, that is up to you. We're keeping it simple, and we're stacking weekly, and we're stacking only $20 to show that anybody can do it. Along those lines, that stack, those 97 stacks have built us a stack of Satoshis of 6,733,430 sats. And that is underwater a little bit, partially because, we're investing on Cash App and they do charge a small fee for investing. But the beauty about dollar cost averaging is we purchased at a variety of prices. We started stacking, I think, when Bitcoin was in the $39,000 range, and we stacked all the way up to the all-time high. I don't think we purchased as expensive as $69,000, but we bought somewhere around $66,000. But then we've also bought all the way down. And as a result, our average purchase price for our Bitcoin stack is only $28,811.47. Obviously, that's less than what Bitcoin's worth now. But had we YOLO'd all in back in July of 2 years ago almost and bought at $39,000, we'd have significantly fewer sats than we do today. All right. Before I let the price change too much more, I'm going to open up the handy dandy Cash App. This week I don't have any money on my Cash App, and that's how I normally like to keep it. But one of the reasons I like stacking with Cash App is because they let you add money to your balance immediately. They make those funds immediately available to convert into Bitcoin, and they will let you transfer that Bitcoin off of Cash App into your hardware wallet immediately as well. They're not a sponsor of their show. There is a referral code in the show notes so that if you don't have an app you like to use and you're interested in using Cash App, if you go into the show notes, click on that link and sign up for Cash App, whatever the current offer is, I think you get $5 free for doing so. And the Bitcoin Bulletin podcast will get $5 as well. So you'll help support your favorite podcast and you'll get $5 for free. All right, well, I was yammering. I've already added $20 to my Cash App. So I'm going to hit Bitcoin, buy Bitcoin, enter $20, press confirm, and boom, just like that, we've purchased another 74,230 Satoshis. That is more than 2,000 sats more than that same investment got us last week. So that is why I'm so excited that the price is down a little bit. Obviously, the higher Bitcoin goes in US dollar terms, the fewer sats you're going to get. You know, if you look all the way back to the highest we purchased when we bought Bitcoin in October of 2021, we paid almost $66,000 per Bitcoin. That only got us 29,000 sats. So we're getting more than twice as many sats by buying today than we did then. Part of the beauty of dollar cost averaging is had we YOLO'd, you miss out on you miss out on those lows. Maybe you buy high, maybe you buy in the middle. The point being, we've averaged it out now to where we didn't have to be a rocket scientist to snap up a reasonably large stack of sats at an average price that is not too outrageous of only 28,811. Even better, because this purchase actually knocks our average cost basis down again. Our new average cost basis is now $28,791.10. So it knocked $20 off our average purchase price. If this year repeats 2019 and Bitcoin goes down a little bit more and stays down or goes sideways until next spring, we're going to continue to bring that average purchase price down. And that is cool. But cooler than that means we'll continue to stack 70 to 100,000 sats per stack instead of 29,000 sats like we did when we purchased near the all-time high, like so many people that FOMO'd in at the last minute, that YOLO'd and tried to time the market instead of spending time in the markets. And it's been 3 or 4 episodes ago, so I don't have the current stats. But for example, had we YOLO'd in when we started Bitcoin Bulletin podcast almost 2 years ago, we would have less than 5 million Satoshis. And because we haven't YOLO'd in and we've been slow and steady, we've been consistent, we now have a stack of 6,807,660 sats. And, if Bitcoin goes to the moon one day, if Bitcoin hits $1 million, for example, that stack would have a US dollar value of $68,076. And that, there's no way you couldn't say that is a heck of a return for somebody who can only scrape together $20 a week. There are places in the world where $20 is a lot of money. $20 might make the difference between whether your family eats or not. And I don't care how rich you are, if an extra $68,000 was in your savings account, even if you're Elon Musk, you notice $68,000. So, and then if you're an average pleb, $66,000 to $68,000, that can be life-changing money. And we're just getting started because I intend to keep stacking every Wednesday until Bitcoin either goes to the moon, they just run out and there's no Bitcoin available to sell because we're on a Bitcoin standard and you're just using your Bitcoin instead of buying and selling Bitcoin. Maybe you're earning Bitcoin, but either way, we're going to keep stacking every Wednesday, and hopefully you are too. And until that time, keep on stacking those sats, you sexy sat stackers.